So we're going to go ahead and move on to James Kessick, who is joining us from the UK, and
Hi,
he's got
Mark.
kind of a funny accent, but he probably thinks we have a funny accent too. So I'm going to project your slide here. So let's get that going, and then we can get started. Okay. Hopefully this will work. My computer's a little bit of a drag right now, so you tell me when you see it on your screen, James, and you can kick it off.
Okay, it's there, but it's not actually started the slideshow yet.
Yeah, it's kind of unfortunately dragging for some reason. Anytime you're
And
ready.
you just made it funny, Mark.
I
Mark, you
did?
just made it funny. You just said it was dragon. What's on the screen?
That's pretty good.
Yeah. What a comedian.
I don't even know when I'm being funny. I'm not good. Of course, it's really not funny when I can't get James's slideshow to start here. Okay, come on. There we go. Is that working?
That's working now.
All right. Phew, that's a relief.
Okay. Well, anyway, hi everyone. So we're told that this is going to be the year of the black water dragon, and it's meant to be a year for big ideas and projects, and success will come to those with dealing in finances. Well, that's all very well and good, but what I know is that there's no guarantees. Knowing what the market is going to do doesn't mean a thing. So rather than making wild predictions, I'm going to talk briefly about trading reviews and target planning to move your trading forward. Okay, so to start with, any business needs to be able to gauge its own performance, broader market conditions and the targets for the coming year. An individual trader needs to do exactly the same thing. So I'd like to share with you just a broad review and preview structure that you can go away and do your own each year. So what I'll be looking at is what's going on in the prior year. Have there been any particular economic and political themes? How the market has been performing and behaving from a technical perspective. If there have been any particular leading markets, I want to look at my own personal trading metrics. Then I want to have a look at the previous year accuracy of my own preview and whether I've accomplished my own targets. Then, of course, we move on to making projections and targets for the following year. So, 2011, what happened? Well, there was QE2 being, the economic recovery was meant to be happening, there were meant to be more jobs, but according to the BLS, unemployment for December 2010 and 2011 were 9.4 at 8.5%, and then the yearly average unemployment was for 2010 and 2011 were 9.6 and 8.9% respectively. So, you know, things didn't really work out from the employment perspective, and the housing market remained subdued and lending wasn't exactly free-flowing. But did this mean that QE2 had failed? Well, I don't think so. I think that there are, because of the European issues and global uncertainties, there was probably a lot weighing on the markets as a whole. And the money maybe didn't get quite to where it was meant to, the SMEs and the people of the United States. From a currency and commodities perspective, we've touched on this already. With the QE program, the idea that QE3 might happen, there was more of the dollar about. Commodities, generally speaking, will go up. if they're priced in a weakening currency because they hold intrinsic value. Plus, of course, the other thing is that they will vary with economic prospects. So, as a rule of thumb, for example, when the economy looks like it's going to do well, the expectation is that oil should go up with greater economic productivity, and gold might go down because people want to put their money to better use and make some better profits. So again, the European sovereign debt thing was a real problem, which basically just won't go away right now. And of course, with all these different things going on, there was a lot of volatility. And I think the thing to really learn from 2011 is that markets can change very, very quickly and dynamically. And then, of course, right at the end, punch in the gut, to many was the collapse of MF Global, and a lot of traders got caught out by that, and I'm sure investors did too. So moving on to 2012, what are the prospects of QE3? Well, I think that there are good prospects for QE3. I think it's quite likely, but will they try and do something slightly different? I think they might do something slightly different, but it will be mostly in line with what's happened already. And then, of course, then the US elections are going to be a big thing. Global political tensions, Iran recently has been escalating the problems. There's going to be oil import embargoes in Europe on Iranian oil. And then, of course, the European sovereign debt issue is still a problem. And this is leading many to speculate whether the euro as a currency is going to actually be in existence much longer. I don't think that's necessarily going to happen. I think that the implications are far too great. But something does need to change, and the ECB's mandate, which currently is just for price stability, needs to change. The real issue is, though, that changes like this in Europe, with all the different nations involved, can take quite a lot of time. Following on from this, any other big companies to fall? Well, I don't know. I mean, there was always this talk of Dexia and big banks in Europe that might have got sovereign debt exposure, and if there was a big write-down, well, what would happen there, and then what's the counterparty risk, and so on and so forth. There could be big problems there, but we'll just have to see and have plans for if that does happen. So my prediction is for possible market behavior, and this is possible, is that the stock market is probably going to be broadly flat to higher, as we currently are, in anticipation of a QE program. When the Fed clearly indicates its intentions, I think the market will do as it did before, and it will go up. This is the stock market. But no matter what happens with the QE program, I think that when it's finished, if Europe hasn't been resolved, you could see volatile conditions again. And I think currencies are going to have a big part to play again in 2012. So finally, be moving on to my personal review without breaking it down too much. 2011, my market expectations were broadly in line with what happened. Obviously, there are various unpredictable things in there, but the dollar was always going to play a big part in my mind, and it did. I was happy with my trading performance, and my trading targets were met. And more importantly, my plan was adhered to well, so that was the most important thing for me. With trading metric point of view, I mean, we can talk about this in at a later stage, but just things like the average day and the level of consistency, and you can talk about metrics for identifying those particular figures for your own trading. And my 2012 targets for myself, well, it's going to be broadly the same for the markets that I trade, which are generally the E-minis. But what I do want to do is, as Mark mentioned before, is expand more into swing trading and possibly add some different markets for my day trading. Looking at possibly the treasuries I used to trade, and I feel they offer some great opportunities. You know, they're affected by interest rate changes, and whilst that might not happen immediately, it probably isn't too far along the horizon. Of course, they open at 8:20, so they're open for the 8:30 economic releases, and then they're affected by global events, quantitative easing, and of course you can spread them quite well because they're interrelated, so you can trade the note against the bond, etc. And the last objective for me is to really target the times that I actually trade. I'd say one of the things that I've definitely noticed this year is the dead time created by trading in the middle of the day and the time that really is less busy. There's less volume, less movement, and you kind of get stuck in a position. So really I want to focus my trading on the busier parts of the day, the beginning and the end of trading sessions. So finally, moving on to the last slide.
I'm trying to. Trust me. Just keep talking, and hopefully it'll switch.
Listen, as much as I believe
Is that the last slide?
it is.
Okay.
As much as I believe in identifying market behavior, I know that we can never truly know what will happen. Our jobs as traders is to identify mispricings in instruments and trade when we feel the opportunity outweighs the risk. Whether or not you have the ability to predict the future, what really pays is hard work. So listen, plan, and trade. Thank you.
Thanks, James. Appreciate that. It's always, I think, beneficial. You know, we're here in the U.S. and most of the coaching team is here in the U.S., so we have a certain perspective on what's happening, and it's always nice when we can hear from somebody outside, right? The borders. Right. You know, it's why it's nice to hear from Shane a lot as well. You know, it's just Canada, right? But still, it's a very different perspective potentially than we have. So definitely appreciate that.